Hello everyone. Welcome back to my YouTube channel, Chemical Adda. Today, we are going to learn a very important concept in chemical engineering economics. Depreciation. By the end of this video, you'll clearly understand what depreciation actually means, the different types of depreciation, what we mean by value in depreciation, and why depreciation is so important in profit calculation and tax evaluation. So let's understand this step by step. First, let's see what is depreciation. So, depreciation is the reduction in the value of a physical asset over time due to factors such as physical deterioration, technological advances, economic changes, or other reasons that eventually lead to the retirement of the asset. So basically, depreciation means the decrease in value of physical assets over time. And as we know, every machine, building, or equipment we use in business slowly loses its value. But why? Because of physical deterioration, which means that after some years, machines undergo wear and tear. Technological advances such as materials may rust or corrode. Then economic changes like new technology come in, making old machines less useful. Or sometimes the market demand changes, and the machine is no longer needed. And hence, depreciation represents the loss in value of property with time and is treated as a cost incurred for using the asset during its service life. Then, depreciation distributes the original cost of an asset over its useful life. Which means that, instead of recording the entire expense at the time of purchase, the cost is allocated, year by year, as the asset is used. Let's understand this with the help of an example. Suppose, a company buys a machine or equipment costing 1 lakh rupee, and that machine is going to be useful for many years, let's say 10 years. Hence, the company pays a big amount in the beginning. And if we ignore depreciation, the first year will clearly show a substantial loss, due to the machine's cost being included for first year. However, in the next 9 years, we will realize significant profits. So, instead of counting the whole cost at once, we spread that cost over the number of years the machine will be used. This spreading of cost year by year is called depreciation. So now let's say, at the end of 10 years, the machine's scrap value is 10,000 rupees. So, the total cost to be depreciated equals 90,000 rupees. And if we divide equally every year, 9,000 rupees will be charged as depreciation. Which means, if we spread the cost equally, say 9,000 rupees every year, the profits look stable and realistic. That way, each year the company shows the true cost of using the machine in its accounts. Then let's understand. Why do we distribute the depreciation instead of showing it all at once? So, the first point is fair cost allocation. So, in any company, a machine is used for many years. And if we charge the whole cost in the first year, that year's profit will look very low, and the later years will look like they had no expense from the machine. And hence, by spreading the cost each year, shows the true cost of using the asset. The next point is matching principle. Which means, expenses should be matched with the revenue they help generate. And that's why, as the machine helps produce goods every year, its cost should also be shared across those years. The next point is realistic profits. So, without depreciation, the company's profits would look higher than reality in later years, because no expense is shown for the machine. Hence, depreciation helps to ensure that profits are reported with greater accuracy. The next point is tax benefits or planning. So, depreciation is treated as an expense. Hence, showing it every year reduces taxable profit gradually, rather than only once. In simple words, we spread the depreciation over useful life of asset, because the asset is used every year to make money. And if we show all the costs in the first year, the profit numbers will be misleading. And hence depreciation makes the accounts fair and realistic. Now that we know what depreciation is, next let's see, what are the types of depreciation? So, there are two main types of depreciation. First one is physical depreciation. So, physical depreciation means the decrease in a property's value caused by changes in its physical condition. Like wear and tear during operation, corrosion due to chemical reactions, accidents, and deterioration due to natural conditions like moisture, heat, or weather. For example, think of a factory boiler. Over 15 years, heat, pressure, and corrosion will reduce its efficiency. That's physical depreciation. Then the second type of depreciation is functional depreciation. So, depreciation caused due to all other causes other than physical damage is known as functional depreciation. The most common cause of functional depreciation is obsolescence. This is caused by technological advances or developments that make an existing property obsolete. Even though the property has suffered no physical change, its economic serviceability is reduced. Because it is inferior to improved types of similar assets that have been made available through advanced technology. Then next cause of functional depreciation is change in demand for the product or service. Shift of population centers. Change in government regulations. Inadequacy, which means that the asset cannot meet new capacity requirements. Abandonment of enterprise. So, because of functional depreciation, the asset may still be in good condition, but its economic usefulness decreases. Hence, as the depreciation is measured by a decrease in value, it is necessary to consider all possible causes when determining depreciation. So as we know, physical losses are easier to evaluate than functional losses, but both of these must be taken into account in order to make fair allowances for depreciation. Now let's discuss what is the meaning of value in depreciation and how do engineers calculate it? So, whenever we calculate depreciation, we need to know three important values. First is original value or initial cost. So, this is the total cost of the asset when it is purchased and ready for use. Second one is scrap or salvage value or final value. So, this is the expected value of the asset at the end of its useful life. Example, selling an old machine as scrap metal. Then the third is useful life or depreciation period. So this is the time for which the asset is expected to be used productively. Therefore, depreciation can be calculated as depreciation is equal to original value minus salvage value. But engineers and accountants cannot wait until the end of useful life of asset to calculate depreciation. And that's why they estimate salvage value in useful life of asset in advance and then divide the cost year by year. So to estimate the depreciation in advance, there are two different ways of thinking about depreciation. First is engineering cost concept. Here, on the basis of initial cost versus value at the end of its useful life, one asset at two different times is compared. And the second one is the appraised depreciation. Here, on the basis of the cost of a new equivalent asset versus the value of the current asset today, two assets are compared at the same time. This distinction is important because sometimes depreciation is required for design engineering purposes, while other times it is needed for accounting or appraisal. So in short, there are three values in depreciation: original value, salvage value, and useful life. And depreciation is simply the reduction from original cost to salvage value spread across useful life. And therefore, depending on the purpose, it can be viewed either through the engineering cost concept or the appraisal concept. Now, let's understand why do we consider depreciation as a cost. So, depreciation is not just about asset value, it serves important business functions. In other words, we can say that depreciation is not just a mathematical term, it is a financial safeguard for the company. So, there are four main reasons on the basis of that we can consider depreciation as a cost. The first reason is that depreciation helps in profit calculation. So, depreciation reduces the book value of assets, and charging it as a cost gives us a realistic profit figure. The next reason is that depreciation helps in tax calculation. So, after deducting depreciation, federal income taxes are calculated, so companies don't overpay taxes. The next reason is capital recovery. By charging depreciation every year, companies set aside funds for replacing the asset in the future. And the last one is consistency in accounting. So as we know, engineers should follow official tax rules, like US Bureau of Internal Revenue rules, so that accounting records are standardized and reliable. Alright, so before we end, let's quickly recap what we learned today. So we learned, depreciation simply means the decrease in value of an asset with time. Then we understand that we don't show the full cost in 1 year, instead, we spread it over the asset's useful life, so profits and taxes look fair. Then we learned there are mainly two types, physical depreciation, like wear and tear, and functional depreciation, like obsolescence. Then we learned that, to calculate depreciation, we need three values, the original cost, the salvage value, and the useful life. And finally, we treat depreciation as a cost because it helps in profit accuracy, tax saving, and planning for replacement of assets. In short, depreciation keeps accounts fair and realistic. That's all for today's session on depreciation. If you found this explanation helpful, don't forget to like, share, and subscribe to Chemical Adda for more simplified engineering concepts. Also, comment below if you want me to cover depreciation methods like straight line, declining balance, or sinking fund in the next video. Thanks for watching, and see you in the next video.